Poland's central bank left interest rates unchanged, but signals it will keep a close eye on deflation. Today I'm joined by Adam Czerniak from Polityka Insight in Warsaw. Adam, do you think we could see deflation deepen, forcing the bank to make a cut in the near future?
According to my forecast, inflation fell in December, so the deflation is already minus 0.8% on year-on-year basis, and this is way below the forecast that were presented by the National Bank of Poland in November. The data we have on fuel prices shows that the deflation can deepen even further in the first quarter, and very likely the deflation will be present in Poland until the end of the second quarter. So all this data, in my opinion, will convince the Monetary Policy Council to cut interest rates, possibly in March, but also likely that they will decide to cut even faster at the next meeting in February.
Are you feeling bullish for the economy this year? And what sort of challenges will the government be under in regards to the budget?
The budget will be impacted mostly by the deflation because falling prices cause a fall in intermediate taxes, VAT taxes in Poland. So this is the biggest part of tax incomes of our government. That's why when the deflation gets extended and deeper, then the incomes and revenues of the government are decreasing. So that's the biggest problem right now for the government because the economic conditions and economic sentiment in Poland is quite okay, slightly improving, not worsening like in some countries in Western Europe. The worst thing that the government has to worry about is the development of prices. Furthermore, of course, there are some tensions right now in the foreign exchange market going on in Poland. There's a weakening of the Euro PLN exchange rate and foremostly of the Swiss franc exchange rate. This could also influence the Polish economy and worsen the sentiment in the forthcoming months. However, this is only a possibility, so the government has to keep an eye on that. However, it's not a thing to worry at this moment.
And speaking about the Swiss bank's decision to scrap the exchange rate ceiling, do you think it could actually influence the stability of Polish banks if more people can't afford repaying their debts?
The biggest problem with the changes in the Swiss exchange rate at this moment is that the payments on interest that Polish households has to pay to the banks will increase. I don't think that there will be some problems with foreclosures or even with regulating their debts. However, the costs of repaying their mortgages will be higher, and that will influence their disposable income. So in that case, the growth of Polish consumption can be a little bit, so let's say 0.1, 0.2 percentage points lower than without this FX rate appreciation.
And last year, Adam, we saw how Polish exports were affected due to the Russian ban, especially in regards to agriculture. So what are you expecting to see this year?
I expect Polish exports in total to grow this year. However, still the export of Poland to Russia and other Eastern European countries like Ukraine or Belarus will be hampered by the political crisis that's right now happening in the East. Already, the share of Russian export in the Polish exports fell substantially due to the crisis and due to the Russian ban on Polish food. And further types of goods can be affected by this crisis and the recent depreciation of the Russian ruble, because at this moment the prices of Polish goods and all foreign goods that are imported by Russia increased by several percent. And this means that in the forthcoming months, the demand of Russian wealthy people on those imported goods will be lower, and that will, of course, affect the export of Poland, for example, of export of cosmetics and manufactured goods.
And Adam, what is your forecast for the Polish zloty this year, and how will the SNB's decision today affect the zloty?
At this moment, so after the SNB decision on letting the Swiss franc to float, it's very hard to say what will happen with the Polish zloty in the forthcoming months or in the forthcoming weeks, because right now we see a large capital outflow from all Central and Eastern European countries, and that could last for at least a couple of days. So in the short term, I see a large variability of the Polish exchange rate. However, later on, after the situation settles down and investor sentiment will become more positive, then I do expect that the Polish zloty will appreciate and sell in the end of the year below 4 zloty at 20 groszy to the euro.
Adam, it was a real pleasure having you on the line again. Thank you very much for your time. Well, viewers, do stay tuned as we have plenty more just like this heading your way. Goodbye for now.